Hey traders, it's John Fortune here of this week's Weekly Forex Forecast. I hope you're having a great weekend. Let's start off with the DXY as we always do. Now last week in the DXY we just moved sideways. We didn't really have any clear direction. And the reason for this is we are in a downtrend but we're at support. We failed to break the key area of support highlighted in last week's video, the 89.710. And as a result of this we just continued to move sideways last week. We pulled back and we retested this low over here at the 90.42. And what this means is going into next week, we're stuck between a key area of resistance and a key area of support. And as a result, I go into next week with a neutral bias on the dollar index. And it just simply means I would prefer to look for opportunities outside of the dollar pairs primarily next week. There's a couple of dollar pairs we'll be looking at, but primarily I think the opportunities lie outside of the dollar pairs next week. Once we start to break above the 90.420, or we start to break below the 89.710, that's when I think we will once again start to see opportunities coming into the dollar pairs. Next is euro-dollar. Now euro-dollar is essentially just the opposite here to what we see in the DXY. We are still in an uptrend. We've pulled back and we've tested this high over here. And we have the same problem, which is that the 1.22390 is a hard resistance area, and this is what we're struggling with here in terms of the price. And at the same time, we are still in an uptrend. So we're really stuck between the 1.22390 and the 1.2150. If you go short, you're going short a current uptrend. And if you go long, you're going long straight into a key area of resistance at the 1.22390. So just as we discussed in the DXY, I would prefer to wait for a breakout either way in euro-dollar to start to look for positions, namely a break to the downside and then a pullback would give us the opportunity to start to look for short positions in euro-dollar. And any break above the 1.22390, which would be preferable because we are in an uptrend, that would give us the opportunity to start to look for pullbacks and long positions into the next key area of resistance, the upside of the 1.2345. So again, this is just reflecting that really in the dollar pairs, we want to be patient as it currently stands. We've been trading the dollar pairs and we've had fantastic opportunities in the dollar pairs over the last 4 weeks. The market looks to be slightly pausing, and as a result, I think we need to primarily look outside of the dollar pairs for opportunities next week. As always, I will be keeping an eye on euro, dollar and other markets next week, and I'll post updates on my Twitter feed as new information comes into the markets. So if you'd like some updates during the week on these markets, feel free to join me over there as well. SPX. Now last week I noted that the SPX was in an uptrend and we were sitting at a key area of support. However, we were moving sideways, we were stuck in this range, and I wanted to see a breakout above the high of the 417191, and this was the indication to start to look for long positions in the S&P 500. So I do see the S&P 500 making new highs. Any pullback going into next week would be viewed therefore, now we've broken out of this consolidation at support, would be viewed as an opportunity to look for long positions into the next key area of resistance, the upside and the target set, the 4270.92. Next is the Nifty. Now last week I highlighted the Nifty in last week's Weekly Forex Forecast because unlike a number of the US stock indices, the Nifty started to break out to the upside. The US indices at the moment are kind of corrective, they're stuck in ranges, which is why they're not being featured. But the Nifty had broken out of this inverse head and shoulders, and we were looking for the target last week of the 15424.25, and we came right to the target, and that's where we finished the week. Very simply put, I do still like the Nifty to the upside going into this week, so for anybody looking to trade the Nifty, any correction in this market would once again be viewed as an opportunity to look for bullish setups into the next key area of resistance, the upside and the target set at the 15575.30. Crude oil. Crude oil is an interesting one, and I noted last week that if we look at the daily chart here, it looks like we've had one with a shallow two, third wave, and you should expect when you have a shallow second wave that you're going to get a deep fourth wave. And then we have the three, and we have this pullback. And the difficulty in crude oil right now is this pullback here what's known as an A wave? So we're going to have A, B before we break the high, and then we come down for a C wave. Or is this in fact the 1, the 2, the 3, the 4, and then the 5, and then we start to come back deeper in crude oil? This is where we are currently sitting in crude oil in the bigger picture. If we drop down onto the 4-hour chart, because of what we just discussed in the bigger picture, I think the better risk to reward is in crude oil shorts to the downside. But the problem we have is this. Last week we had a double top pattern in crude oil which failed below the low over here. And when you have a double top which fails, you start to get a developing, expanding triangle. You can see 1, 2, 3, 4, or A, B, C, D. That's what happens when you have a failed double top. Now, an expanding triangle pattern shows extreme indecision in the market, and this is really telling us to be patient, to wait. So since the reward to the upside, since we're coming to the end of a third wave, is quite small in crude oil, I would prefer to filter out any long positions in crude oil currently and wait until we get a bigger reversal to the downside to start to look for short positions in crude oil. So I think patience is required now in this market. Next is gold. Now, gold is a market I've been highlighting to the upside, especially as we're starting to see inflation pick up and we're seeing bond yields coming down as we looked at in previous videos. And last week I highlighted the 1910.19 to look for long opportunities into this target, and we took out this target almost to the pip. That was the high of the week, more or less, in gold last week. Going into this week, gold is one of the three dollar-based pairs that I do like and we'll be looking at: gold, silver, and pound dollar. And any pullback in gold next week will be viewed simply as another opportunity to look for bullish reversals in this market up towards the next key of resistance, the upside and the target set at the 1933.28. Next is silver. Now, silver was highlighted as a market to watch to the upside last week, and we just moved sideways. We didn't go anywhere in silver last week. However, we did finish the week breaking out of this double bottom pattern from the bottom of this channel, and this is actually an outside day or a bullish engulfing candle in the daily chart. So as it stands, this is a very positive sign going into next week, although we didn't really go anywhere last week. So very simply put, going into this week, any further correction for anybody not involved will be viewed as an opportunity once again to look for long positions into the next key of resistance, the upside and the target set from last week at the 28.72. And the other dollar-based pair I like going into next week outside of gold and silver is pound dollar. Now, this is a market I've highlighted to the upside, and we came very close to achieving the target at the 1.4240 recently. It still hasn't taken out this target, so if you are involved from previous videos, I do expect it to take out the 1.4240. If you're not involved, we need to see any other pullback in this market next week would be viewed once again as an opportunity to look for bullish reversals into the next key of resistance, the upside and the target set at the 1.4240. Outside of pound dollar, I also like pound yen. This was a market highlighted last week. We were in this pennant and we exploded to the upside, and we took out the target set to the upside at the 155.40. Very simply put, going into this week, we have really nice momentum in this market, so any pullback next week will be viewed once again as a great opportunity to start to look for bullish reversals up towards the next key of resistance, the upside, the target set at the 156.51. And the final pound pair I like this week is pound Aussie. Now, pound Aussie has been out of the weekly forex forecast for a while, and if we look at this on the daily charts, you can see it's because we've been trapped in this kind of ascending triangle pattern, stuck below the 1.82040, but trending to the upside. The market's been very choppy. We did break out of this last week, and pound Aussie goes into the weekly forecast. I will be looking for long opportunities in this market next week. If we drop down to the 4-hour chart, you can see we broke out, we pulled back in this kind of bull flag pattern, and we bounced from this key area of broken resistance, turning support, and we broke higher with momentum. So very simply put, going into next week, I do like the look of this market. Any pullback in this market will be viewed as an opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 1.8521. Next is Aussie CAD. Now, last week I highlighted this market in the weekly forex forecast to look for bearish setups down towards the 0.9255. We did sell off, making our way towards this target. So for anybody not involved from last week, I do like the look of this market once again, and I do think we're coming down to the 0.9255 this week. Any pullback in this market will be viewed once again as an opportunity to look for bearish reversals down towards the next key of support to the downside and the target highlighted from last week at a 0.9255. And the third currency I'm looking to outperform the Australian dollar over the next week or so is the euro. Very similar to what we looked at in pound Aussie, we're on a daily chart here, and we've been in this corrective pattern, this ascending triangle type pattern really since March. And this is why we haven't featured EurAusd. It hasn't been moving, but last week we did start to break out to the upside. If we drop down to the 4-hour chart, what I would like to see going into next week is a pullback towards the breakout level. Any pullback in this area will be viewed as an opportunity to look for bullish reversals in this market up towards the next key resistance, the upside, the target set, the 1.5936. I also like Euro Yen. Now, in previous videos, we highlighted the 133.45. We took out this target and we broke through and we came very close to taking out the second target to the 134.11. Very simply put, going into this week, I do like the fact that we've broken higher with momentum. So any pullback towards the channel bottom here will be viewed next week as another opportunity to look for bullish setups into the next key resistance, the upside, the target set, the 134.11. Or if we trade into this and then pull back, I will be looking for long positions into the second target to the upside in Euro Yen at the 134.86. And last but not least, we have CAD Yen. Now, last week we came up and took out the target set in previous forecast videos at the 90.790. We did start to move sideways a little bit. This was just a pause before taking out this target. So going into this week, I do favor currencies generally against the yen, to appreciate against the yen, but I do like CAD Yen, Pound Yen and Euro Yen the best going into next week. So any pullback in CAD Yen, and we've broken out of this near-term pennant, will be viewed as another opportunity, especially as we have nice momentum to start to look for bullish reversals into the next key resistance, the upside, the target set at the 91.56. So that is it for me for this week, guys. Those are the markets on my watch list going into next week. Those are the markets I will be keeping an eye on to look for opportunities in the directions highlighted. Once again, for those of you who would like to get midweek updates on these markets and other markets, feel free to follow me at Twitter, where I do post updates on the markets during the week. With that said, a big thank you to everybody who likes, shares and comments on the content on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a nice weekend, and I want to wish you all a fantastic week next week. The only thing left to say is take care and don't forget to trade safely.